Okay, everyone, we're going to begin. Thank you so much for giving me your time. And at the very least, I hope you find this to be an educational experience and you learn some things about investing. And I just want to start off with this disclaimer that all signals and trading opportunities provided both orally written or electronically that are disclosed to visitors or subscribers are for educational demonstration purposes only. Right Trading takes no responsibility for any participation by visitors or subscribers in the futures, forex, or stock markets, nor any profits or losses that may be incurred. Participating in trading in the futures, forex, and stock markets does involve a substantial amount of risk, and it should be understood that a person can lose a substantial amount of money. Therefore, the participation in these markets is not appropriate for everyone. Always carefully consider your financial position for trading. You may want to consider doing your own due diligence and consulting a financial advisor before taking a trade. And those of us here at Right Line Trading are not registered financial advisors, and we're not licensed commodity trading advisors. Now, I just want to talk a little bit about trading itself as a science as we know it today. First of all, the way that the market is today is really different than when I started this company back in 2012. I was not blitzed by hundreds and hundreds of emails every day, the likes of which I put some of the headers on. Monthly income blueprint, parentheses roadmap. That everyone has $1 million roadmap, your $100,000 roadmap. Another email I got read 99% in 24 hours. And this is even better. A cannabis stock for people who haven't won the lottery. Roku, 100% Monday morning. The problem is that these emails are not written by traders. They're not even written by people who own the company. They are written by marketers. And what they do is they prepare information, and their job is to write content. And what they do is barrage us with these kind of emails. And I think that they're very detrimental to us. And the reason they're so detrimental is that they provide us with a mindset and an expectation that is simply not achievable. And if we look at the trading community as a whole, all of us together as an individual cohort of people, how much of us actually do make money investing in any of these products? And I'm talking about 100% of the products out there. And I'd be willing to proffer that probably very, very few. And the reason is that we've lost our fundamental grounding and lost the fundamental concepts of what investing is all about, because we are so mentally barraged with this stuff. I mean, people who proffer things like this are all over my Twitter, my Instagram, especially my Facebook and my YouTube. I can't escape them. So what I want to do is sort of bring you back a little bit to earth and understand a little bit more about investing fundamentals and what it really requires to have a really nice return on your money without taking a significant risk. Because what you're going to see in this webinar is an investing style that I'd be willing to bet you've never seen before. You may have heard of it, and some of you may have not even heard of it either. But it's a little bit different than trying to make 99% in 24 hours or buying one cannabis stock and feel like you've won the lottery. This is all nonsense. And that's really what you have to take it with. Not just a grain of salt, you got to delete it. And the only reason I keep them and I look at them is I want to see what other people are saying. And I want to see what other content writers are writing. And they're pushing this thesis on you. And I believe it changes your mindset. This was just one other. And what it's doing, and I think it's important to bulletproof yourself against this, or you're going to fall for it. So the first thing we need to do is sort of put up a Teflon shield to these things, and then we can move on to what works. And it said, I'm hosting a free online class about how to day trade with $500. And the session is going to be really valuable, no matter if you're totally new to trading or you've been trading for a while. And what I wrote is this is a huge mistake, because one of the most common reasons that traders go broke is that they start with too little money. I mean, it's a question I get all the time from new traders who want to come aboard. They say, what's the minimal amount of money I can put into my trading account in order to trade? And that really should not be the question. I mean, the question is, what is a really safe amount I can put into my trading account so that I can really optimize my potential to get a nice return on my money? So by telling traders that they can start with $500, what they've essentially done as marketers is set you up for failure, because you're not going to be able to day trade anything with $500. You certainly aren't going to be able to day trade stocks, and you're not going to be able to day trade futures. So how are you going to start with $500? Well, this is from a tremendously big company. What they want you to believe is that you can take a tiny amount of money, and as the CEO of the company always tells us, he took $500 and in 45 days turned it into $153,000, which is not possible. But if he can convince you that he did it, then you're going to believe that you can do it. And if you believe that you can do it, you're going to go broke. But their goal is not to make you money. It's simply to convince you that trading is easy. Everyone has trading secrets, and if you learn their secrets, you're going to make $1 million. You can start with a tiny account. If I see the word no-brainer system one more time, my head's going to explode. I mean, there is no such thing as a no-brainer system. You really have to have patience, diligence, and you have to work really hard. And again, secret option strategy revealed, I get those at least 2 or 3 times a day from at least 2 or 3 different marketers. Everyone's got secret option strategies. And I know for a fact that the vast majority of options traders go broke. So let's bulletproof ourselves against all of this garbage and get past it, and step away from the 95 to 99% of traders who start out in this business now are barraged with this kind of advertising and wind up going right down the drain. Because if you follow any of these rules or logic, or take the premise from the start that trading is simple and all you have to do is learn a few secrets that no one else knows, like the big banks don't know it, the large trading institutions don't know it, the 500 million other people who've tried to trade don't know it, Warren Buffett doesn't know it, all the outstanding traders who ever traded in the history, they don't know it. But these guys, they figured it out. So does any marketer ever tell you that trading takes hard work? It takes months of practice. If you want to be a stock picker, and that's what we're going to talk about today. We're going to talk about picking right stocks, but we're not going to be buying stocks. you have to do hundreds of hours of reading. Again, you have to have a huge amount of patience and precision. And you have to have a trade methodology that works. Now, they're not going to market this because this is going to make you think twice about taking the money in your cookie jar. Maybe it's $2,500, maybe it's $5,000, the at-risk capital that you have worked diligently to put aside and is really precious to you. You don't want to lose this money. And they're not going to tell you that it takes hard work. And you're going to have to sit and practice every night, because that's not what sells. And that's what they're all about. Unfortunately, that's not what I'm all about. And I'm not telling you that I have all the answers, but I am telling you that I'm going to tell you that these are all the things that are true. Making money in the market, whether if you day trade futures, Forex or stocks, swing trade, or long-term trade, doesn't matter what you do. If you take your money out of cash and move it into any investment vehicle, stocks, bonds, whatever, it takes a lot of hard work, months of practice, in order to compound your money and provide yourself with a nice return on capital. And what is the reason that we even bother with any of this? Well, one is it may be that you want to provide yourself with a new career. It may be that you want to augment your income in the present career you have. Or third, it may be that you're super happy with your job and that you make a good amount of money. But remember, holding cash is not necessarily a great way to preserve your capital. The inflation rate versus what the return you're gonna get from a money market account are very similar, if not actually to your detriment. So if you hold your money in cash without using any other vehicle to try to grow it, actually the buying power of that cash is going to erode. And so you're going to actually, it's actually going to seem like the cookie jar has sprung a leak, because you're going to be able to buy less and less with the same amount of money. So those are also people who come in and invest their money. They want to make a better return than just sitting their money in cash. I put this all in red is, and maybe I'm doing a little bit of overemphasis, but I don't want anyone to leave this webinar with the understanding that it's easy to make really great money in the market. It's not. But the easier these people make it sound, the more stuff they're going to sell. And that's all they're interested in. Now, this lecture really is about the lost art of investing, and it's the way that it's the Warren Buffett way. And it's the way that Peter Lynch invested their money, Peter Lynch, Carl Icahn, some of the best investors in the world. And you don't see any of them offering you software, offering you trading rooms. To the detriment of myself, I'm telling you, these genius investors are not proffering that you're going to take $500 and turn it into 5 million. And the reason, again, and I don't want to beat these gurus down too much, the reason that they don't talk to you about this type of investing is they don't have the training to do it. And they also don't have the desire to do it. Their goal is simply to dump some software on your head, and then how you ultimately do is your problem. And they're out to make a fast buck, and they don't care what your results turn out to be. And then I'm going to close on that. So I don't want to beat this down. But what I see on my YouTube feed and on my Facebook feed are these products that come and go. I saw one where some guy was proffering a system And all he was doing was really looking at insider trading. But he said that he knew which insider traders never lose. It was a $2,000 system for 1 year. And that's all I saw all over my Facebook. And he's like, he's vanished. He's got his huge number of people to purchase, and they're now gone. And that's what they do. Another guy is marketing. It's called stock flipping. Now, the difference between a stock flip and a stock trade continues to elude me, even though I read all his emails. But somehow stock flipping sounds like unique and cool. So he charges you a huge amount of money to flip stocks. And in 6 months, we'll never hear from the guy again. And that's what we go through here. We go through product cycles. They come, they hit you hard with easy to make money schemes, and then they disappear. And that's what we don't do. And I'm just warning you. And again, I want to dampen down your expectations. Now, I want to show you one other problem that you have, and this is a problem that all options traders have. When you buy any spread position, it can be a vertical spread position, it can be a calendar spread, it can be a iron condor or a butterfly position. You're going to have an expiration date on it. Now, it just so happens, and I did this honestly just by accident. This is a bull call spread I actually put into my options alert newsletter, and it's going to expire tomorrow. It's a 175, 185 call, and Visa's currently trading at about 186.50. So we're going to get, in all likelihood, a 100% return on the potential investment, a 100% return of whatever the potential amount of money we can make on the spread. And I think for about 40 cents of risk, we could make about 60 cents of money. So for every spread, you're going to make $600. But what happens when the spread position, let's say this was a November expiration, and Visa hit that 185 top number sooner? The problem is that you're going to be left with a lot of time premium. And when you close the spread, you're going to wind up only making 50 or 60% of the potential amount of money you can make if you allow the spread to go all the way to the expiration date. But rules dictate that if you're making a call and you're selling the 185, when it hits 185, you got to close the position. So that's a problem that I get in the options portfolio. If I get 3 or 4 or 5 winners in a row and those winners occur too quickly, I'm going to get 40% of my potential return. I'm going to get 50%, 60%. But if I take one loser, I'm going to lose 100% of my potential loss. Now, the risk to reward is always skewed in your favor. For every 60 cents you risk, you only want to, for every 60 cents you can make, you only want to lose 40. The point is, it's easier to call a direction than it is to time the direction. And that's always an issue when you create a spread. Not only do you have to call the strike price, but you have to call the expiration date. And that expiration date is really hard. I mean, it's almost impossible to time that 185 hit right at options expiration. That's the only way you can pull 100% of your potential return out of this spread. So I have multiple winners at 30, 40, 50, 60%. That's really one of the difficulties in creating a spread position. Now, you don't get that if you simply buy a call or you buy a put. but those are very risky. Those are much riskier positions. They cost a lot more money. And one of the reasons I created this spread was that I didn't write down the price of the spread, but obviously the price of the spread was a lot less than just buying a 175 call. That would have been a lot of money to buy that call. But to buy the spread, which caps your upside, your downside's already always capped. You can't lose more than you pay, but it caps your upside. But it reduces the amount of money that you're required to create the position. So I just want to show you one of the things that is always knocking against you when you create any type of spread position. You got to hit that number, that strike number, right at expiration date time in order to garner 100% of your potential returns. It's a very tough thing to do. Now, if you have the time and the energy and the willingness to leaf through hundreds of pages of material and become a stellar stock picker, you can work past all of those issues. And you really can make a huge amount of money with a smaller amount of risk. And that is no lie. I'm going to show you how to do it. I mean, there's no hype in this service. Now, I want to show you a position that I created about a year and a half ago. And here is where I'm going to give you a little bit of insight into what I'm talking about. And I've never heard it proffered before, but it's a really, really terrific way to make money. And that is to buy a leap. You can buy a leap, a single leap position, I'd say may cost you $600, or $6, and on options lingo. And the return that you can make on that leap is 200 or 300% if your thesis about the underlying stock that you're buying is correct. And when I bought this, and I bought Xilinx right in this area here, and I remember I bought a $75 strike leap with a 2-year expiration, and it went all the way to 140. And even though I had a lot of time premium on it, these were the metrics. Xilinx went to 64.50, hit my strike at 75, went to 120. I bought it for $6.10. The other thing I always like to do is buy an out of the money leap. If you buy an out of the money leap, it's going to be relatively inexpensive, because our thesis is going to be that it's not just going to burn right through the strike price of our leap, but it's going to go up an enormous amount more over the time that we have slated for the leap to expire. I sold the leap for $27.45. That was 350% profit. And I made $2,135 on one position. Now, the reason I bought Xilinx, because it was just an enormous amount of due diligence. And at the time, Xilinx was proffered as the #1 chip maker for anyone who wants to create anything in the artificial intelligence area. If you needed a chip to move into the AI sector, it needed to be a Xilinx chip. At the time, artificial intelligence was really in its nascent form. There wasn't much out there in artificial intelligence. And that's what we need to look for, something that hasn't been beaten to death already. Although, let me tell you, some of the things I'm going to show you may seem like they're overvalued, but they're not. And Xilinx skyrocketed based on the fact that AI kicked in. I mean, they acquired incredible numbers of new companies, and they doubled in stock price. But instead of buying 1,000 shares as Xilinx, which would have cost me $64,000, all I paid was $610 to leverage 100 shares and make $21.35 on a $645 investment. That's a great return. But it's not what anyone's going to proffer, because this whole thing took about a year to play out. I didn't get this money overnight. It wasn't 100% return in 2 hours, which is what everyone is marketing. Now, I want to talk about one sector that has really been hyped to death, and everyone's telling you about the $3 5G stock that's going to wind up going to $6,000. And I get those emails all the time. The most common ones I get when they're proffering a stock is some really cheap stock involved in 5G. And I've done an enormous amount of background work on 5G. And 5G is an area that we're going to visit in this service. But what I want to do is just give you a little background about 5G and show you two of the heavy hitters in 5G, and show you that if you know what you're doing and you understand the fundamentals of the sector, you can really pull a lot of money out of it. Only you have to do what no one wants to tell you to do. You have to do an enormous amount of work, research, and constantly reevaluate your position. The only other thing about Elite 2 that makes it really advantageous is you can actually put a stop order on it. Now, a short-term option position, you just can't. I believe that stop positions are actually exploited by market makers. If your option comes close to your stop position, the market makers will just take your stop from you. And I just don't believe that you can really manage stops that well. You can try, but I have had very, very bad luck. And usually when I lose an option position, it's because I hold it through earnings, and it'll have an earnings miss, and the value of the spread will just go to, or the call will just go to heck. So it's cheaper just to leave it and let it expire than it actually is to sell it. So I have not found it advantageous to work with stops, but in leaps you can do that easily. Now, leaps in the options portfolio now, and I'll tell you what they are towards the end of this, and I'm going to give you some really good 5G stocks that you may want to look at. Now, the whole thesis behind 5G is the speed with which it transmits data and the volume of data it can send through the air. Now, in my own words, I wrote that cable companies suck. And every year when they do these surveys, cable companies always come out at the bottom. Customer service is horrible. And like I wrote, everyone hates them, and it's been that way for years. And it is no secret why. It's because in general, no matter what area you're in, you don't have any choice. I mean, in the area I live in, you either go with Comcast, or you don't have cable a cable that runs into your house to deliver your data. I've tried Dish Networks, and it's awful. If there's a cloudy day and it rains, or I'm in South Florida, or if it snows or the weather's lousy, your Dish network is going to go out, or the speed is going to collapse. So you only have one choice. And that's the reason that they're still in business. That's the reason they don't care about their evaluation when it comes to customer service, because they're the only game in town. But that's coming to an end with 5G. And that's where the revolution comes in. And although you may think that you've missed out on this. I'm telling you, you have not. And I'm going to talk for about 10 minutes on 5G and give you some really terrific stocks that a couple of them may seem like they've passed you by, but I'm telling you, you're still early in the 5G cycle. Now, for Comcast and any other big cable company to provide you with service, they need an immense amount of infrastructure. And the infrastructure is super expensive. So, I mean, they got to bring a cable into your home. Now, most of the cable runs underground. It just so happens in this area, it's all above ground on telephone poles, which makes it even worse, because when we get a hurricane, we lose all our cable connections, sometimes for 2 weeks. But the cost of putting that cable into place is $80,000 per mile. And that does not include the cost of running the cable to your house. So the general dictum that used to be around 10 years ago, where they're going to be running fiber optic cable into everyone's home to increase the speed of these cable connections, is gone. Nobody believes in that anymore. Nobody's laying fiber optic cable anymore. That whole thesis has collapsed. And there were a couple of companies in the internet era that a couple of them were actually phonies, and Global Crossings was one of them. And they cooked the books and they went bankrupt. But that's one of the problems that Corning has. If you've been holding Corning for the last 10 years, it's gone nowhere. And the reason that Corning has been dead money for over 10 years is that they're one of the big makers of fiber optic cable. And everyone is moving away from that. And fiber optic cable is dead. So it not only tells you where to put your money, it tells you where to keep your money away from. So any company whose major product is fiber optic cable is going nowhere. They're not going to go out of business, because in certain instances, fiber optic cable is going to be required. But this massive plan to wire the entire United States with fiber optic cable is vaporized. And 5G is what's making that all possible. Because instead of miles of cable and endless construction, you're going to get something like this. It's a little box and it goes on a telephone pole. I pulled this off the internet, and this is a 5G box. And this 5G box is what propagates that 5G signal. And this is called a node. And it propagates the signal from node to node to node. And it does so at an unbelievable speed with an incredible amount of data. And in fact, if you look, I'm going to go over a little bit of 1G, 2G, 3G, and 4G. And essentially, the increase in speed and the amount of data you could send down those networks is sort of an arithmetic curve. It's like a straight curve up. But then when you get to 5G, it becomes geometric. This is a stellar improvement, astronomical improvement over 4G. And if you'll notice, it hasn't really been rolled out yet, except in a few cities in the United States and almost nowhere in the world. So we are very, very early in the 5G cycle. So don't think you've missed out. And these boxes I believe, are going to bring Comcast and Time Warner to their knees, because you're going to dump Comcast and Time Warner for a 5G box that sits on your telephone pole that brings you data 100 times faster and 100 times more data per second. These small cells are 6 times cheaper than cable to lay. So cable's going to go, and 5G is going to replace it. So the thought that it's just going to be something that's on your cell phone is a very narrow way of looking at this. It's going to revolutionize everything we do in every area in terms of tech. And I called it a tectonic shift. I was actually quoting someone in mobile infrastructure, because from 1G to 2G and 3G to 4G were not tectonic shifts. The 5G rollout is a tectonic shift. 5G is able to handle 10,000 megabytes per second. That's 100 times faster than 4G on its best day. Now it's coming to select markets, and what the article I read was about 6 months old, so this year meant 2019. And it has been rolled out in very limited areas in 5 cities in the United States. But for the most part, there are very few people that have 5G networks. Now, at the time, the first mobile phones, because I really want to go over a little bit of, again, if you understand the thesis behind why 5G is so valuable, you'll understand why the companies I'm going to proffer to you are really early in their cycle. And when 1G was rolled out, the companies that blew it out first were AT&T. And the stock went from $4.94 to $28.13. It went up 469%. Motorola was the other one. And you know that the first cell phone was made by Motorola. And it went up 946%. So if you saw a Motorola at $9 and it was trading at $25 and thought you'd missed the boat, you can see how wrong you were, because Motorola still had another $50 to tack on to its price. The same thing with AT&T. If you saw it at 10, thought you missed the boat, you still had a long way to go. And this is the appreciation in percentage off the stock. If you are holding a leap, your percentage, I mean, I can't even quantify it accurately for you, but it could be 1,000% on much less money tied up and a much smaller risk. You're going to get a return that's astronomically higher. In 2G, it was Sprint that went over, this is 5 years now, 430%. Ericsson, 3,217%. And these are all accurate numbers, but they didn't happen overnight. And that's not what, what you're being marketed is, Motorola, Ericsson, Sprint, they've got to double, triple, quadruple, and it's got to be done in 48 hours or it's a useless investment tool. Well, this is a thesis that rolled out slowly. So this might be the kind of play that we would buy a 1 or 2 year leap and then roll it over again if we believe that there was still additional upside. But the amount of money we would make this 430% would pale to the amount of money you would make on a single leap in terms of percentages. And the amount of money you would need to make this play would be infinitesimally smaller. I mean, back in the internet era, I would never buy a stock I could not buy less than 1,000 shares of. And it didn't matter what it was or what the price was. If I couldn't buy 1,000 shares, I wasn't going to mess with it. Now, that's not the case anymore. I'm not going to tie up a huge amount of money like that. I would rather use a vehicle that allows me to leverage my money a lot better. 3G was Broadcom and Qualcomm. Broadcom, 245%, and Crown Castle and Qualcomm, 268%. And 4G was Crown Castle. It's one of my favorite stocks, and I've traded it many times with shorter term options, which are still obviously a decent investment vehicle, but that's just not something that I'm talking about today. And that went up 546%. And they make cell phone towers. And they needed an enormous additional number of towers, and Crown Castle skyrocketed. Now we come to 5G. Now there are three specific catalysts. And when I tell you about them, you're going to see why we're very, very early in the cycle. We're not even close to the end, and you've missed out on nothing. I'm telling you that. Now, the number one thing and the most powerful one, in my opinion, is the Internet of Things. And essentially what that is the connectivity of everything electronic, of all machines, of wristwatches, of every electronic device in a building, an automobile. I mean, essentially, every single electronic device in the world will be interlinked together via what's called the Internet of Things, via 5G. 5G has the speed and it has the power to carry that much data. So right now, I pulled from Cisco that in 2020, the number of connected devices is going to, at the end of 2020, is going to reach 50 billion. In 4 years, it's going to reach 1 trillion. Can you imagine what it's going to reach in 10 years? Eventually, every single person on Earth, save a few people living in unfortunately in destitution and poverty, anyone who has a single electronic device will be interlinked in the Internet of Things via this 5G network. So you can see in what I believe is the most powerful catalyst for 5G related stocks, the Internet of Things is the most powerful. The next one is driverless cars. Now, I believe that in the next 5 years, and I'm no young kid. I mean, when I started my career, there were no cell phones. If I had to make a call, if I had to make an important call, I had to go find a payphone. And if I was sitting in a movie theater and I got a page, I had to go put 35 cents in a cell phone. I mean, since that time, I mean, look what's happened to the world. And I'm telling you, in the next 5 years plus, driverless cars are going to be what we're going to see very commonly. And the amount of information it takes for driverless cars to work is enormous. The number of sensors on a driverless car are enormous. You know, they have to look out for everything. Cars, trucks, birds, rolling balls, street litter, potholes, everything. And so it's basically a driverless car is basically a mobile sensor device that requires an enormous amount of data to work. And this is where we're going. We're going in the direction of driverless cars. I mean, the time will come, and it may not be in my lifetime. It may be in your lifetime if you're younger than me, when you're just going to get into your car, you're going to talk, you're going to tell it your destination, and it's just going to take you there. And it's just going to do it in the most efficient way possible. And you're not going to ever touch a steering wheel except in some kind of an emergency. And that's all going to rely on the 5G network. And you know, there's a lot of cars. Google's got a driverless car. There's so many companies experimenting with driverless cars. It's not going to be long. And I don't think anyone who's listening to this webinar would argue that ultimately at some point in the future, we don't know exactly when, driverless cars are for the most part going to replace cars where we sit behind the steering wheel. They're going to replace truck drivers, unfortunately, and put tens of thousands of people out of work. But no one's going to drive their car. No one's going to drive their truck. No one's going to drive anything. Everything is going to be done via 5G network, via a car that has so much processing power, much more than your home computer. No matter how many gigs, no matter how sophisticated your processor, no matter how many gigs of RAM you have, this will be infinitesimally stronger than your home computer. And the only network that can do that is 5G. And the third catalyst is augmented and virtual reality. And I see that as sort of the weakest, but still a very powerful way, another powerful driver. Because we don't even understand yet, besides playing games on Google with those virtual reality glasses and things like that, all the practical applications that augmented and virtual reality can bring to us, and all the advantages that we can get by having super powerful ways of perceiving our reality electronically rather than through our own eyes. Now, a 5G network provides up to 1 million connections per square kilometer, which is an exponential increase in the number of connections. 4G can't even come close. So if augmented reality and virtual reality tech are going to come to fruition, they must have 5G networks. And the 5G network has to be everywhere in order for them to work. And I believe that these are really going to change the way we perceive the world in certain respects. Like I said, I don't have a great imagination, and I can't imagine all the ways that virtual reality can be applied in a way that can help us. But I bet you companies are going to find 1 million practical applications for virtual reality once they have the ability to make it work. And right now, they really don't. 5G is what's going to do that. So are we too early on the 5G cycle? Absolutely not. Is there going to be a $5 stock that's going to make you a trillionaire and you're going to think that you won the lotto? No, because this is going to evolve slowly. If you have $500,000 and you can put $100,000 into one of these stocks, you can buy and hold. If not, I'm going to give you an alternative. Now, for me, the powerhouse 5G is Verizon. It is positioned to control all the 5G that goes into residential broadband. It is going to be the world leader in 5G on your cell phone. It's already deployed, as I mentioned, in 5 major US markets, and your cable company is going to be replaced by the 5G service you get through your cell phone. You're not going to need to go to Comcast and ask them to put in any kind of infrastructure. It's going to come right off your cell phone, go right to your computer, and that's how the world is going to run. And Verizon is going to be the company that does that. Now, I want to show you Verizon. Just a little bit more on Verizon. And it's really just, I'm going to kind of skip it because I don't want to get boring about it, because it's just about the speed and just how incredibly fast the Comcast 5G connection is. This is all proven. I mean, it is lightning fast compared to anything that's out there now. Now, the forecast is that Verizon will reach a $400 billion valuation by 2021. its current valuation is $200 billion. So in 1 year, from 2020 to 2021, it is estimated that it will double its valuation. So we can only guess what that's going to do to the price of the stock. It's going to really shoot it up. Now, I'm not going to go into the price to earnings ratio and all that, because I don't want to get it down into the minutia. But that's the stuff that I do because I want to try to get into some of these companies at the best price. Sometimes it's just impossible. I don't see Verizon making much of a pullback anytime in the next 3 to 4 years. Now, here's Verizon. Now, I am in Verizon, and I got in right here. I put these double red lines in here, and you can see Verizon is a little bit choppy. But from 55, it's now knocking at 60. And I'm telling you, at $60 a share, Verizon has an enormous way to go. And there's no reason that Verizon can't go to $100 or $120 a share in the next 12 months. If we hold a 12-month leap on Verizon, we can make 200, 300, or 400% on our money. And this is a very low risk position to hold. If the market takes a beating, something happens, and the market drops 10%, Verizon will drop 2%. These are strong hands holding Verizon because everyone is starting to see what's happening with 5G. And that's one position that I want to give you simply for attending this. And the other one is Ceragon Networks. And that's not as well known. But what Ceragon does is they make what's called backhaul nodes. And if you look at the node that goes up on a telephone pole, it creates a certain amount of noise. And you need backhaul nodes to filter out the noise. And they are the #1 company in the world to make those backhaul nodes. It reduces the cost and increases the efficiency of the 5G network for anyone who has Ceragon as a customer. And it's already got Verizon, Sprint, AT&T, T-Mobile. They're all bidding for its wireless products. But what makes it so advantageous right now is they haven't closed anything yet. And that's why I told you that this whole field is really in its infancy. And I'm not going to really go into this because it's just more data about why Ceragon is such a great buy. Okay. Now here's Ceragon. Now, believe it, it hit a high of $5 a share, and it's come all the way down to $1.80. And it's tremendous buy here. And Ceragon Networks is one of the stocks that we're going to get into. Now remember, Ceragon is in its infancy. It has not closed a single deal yet with all of those big carriers that I told you. But it has the premier software in order to create those backnode devices, which are required. So Ceragon may seem like a little more of a risk to you because it's taken what this was an earnings miss. And it was supposed to make 4 cents a share, and it made 1 cent a share. And it was really punished. And it's really now basing at $1.67. It doesn't make it any less valuable at $1.67 than it was at $5, nor does it make it any less of a great potential future purchase. If your thesis remains intact, this is a great buy down here at $1.67, or now it's a little ramp up, about $2. And the third one is Zayo. They make small cells. Those are the actual cells that go up on the telephone poles. But the reason I've kind of hedged on Zayo is because Zayo right now, and I'll show you Zayo. Here is Zayo. It had an earnings miss, but the big money and the smart money knew just what to do. They came right in and bidded it right back up to $35 a share, right off of 20. And the reason that Zayo is a little bit risky is because Zayo has had multiple offers to go private. Now, there was one that came up in May that they turned down, but they are still getting bombarded by companies who want to take Zayo off the market and want to incorporate it. They don't want to do a merger. They actually want to bring the company off the NYSE and take it private. And they're doing that because they can provide Zayo with an enormous capital infusion without Zayo having to do a secondary offering, which would dilute out its stock. So Zayo may take the deal. But if they do go private, it will knock the price of the stock down a lot. That's why it's holding right here. And it's been holding at this price for months because no one wants to move on Zayo until they either say for sure they're going private, in which case all the holders are going to take a little bit of a beating, or they're going to definitely not go private, in which case I think Zayo is going to fly. But with that kind of uncertainty, we're going to sidestep Zayo. And what we're going to do is we're going to go to Skywork Networks. And you can see that Skywork is on the fly. It was trading around 65 just a few months ago. It's all the way up to 115. And Skywork Networks has a long way to run. These are your premier 5G stocks. There is no other stocks better if you want to capitalize, in my humble opinion, to capitalize on the 5G rollout, do it safely, and make a couple of 100% on your money. And you're not going to make it overnight because the rollout is slow. But as it begins to roll out, it's like rolling a snowball down a hill. I mean, it gets bigger and bigger, and it creates momentum and momentum and momentum. These stocks are going to fly, and don't think that Skyworks has gone past our price. You saw that basically the 5G rollout is really in its infancy. I mean, it was just delivered into our hands after 9 months gestation. We've got a live, healthy baby, but it is not matured, and none of these stocks have even come close to reaching the price that they will eventually trade for. And let me tell you, just to give you a couple of anecdotes, I used to sell naked puts on Google back in 2002, 2003, 2004, and I've made a lot of money doing it. It was an unbelievably risky thing to do. I mean, it was almost reckless, but Google only went in one direction, which was up. And it was trading between $150 a share and $200 a share. And everyone was saying it was overpriced. And now it's trading at $1,000 a share. The other good example that I like to cite is Costco. When Costco was trading at $150 a share, I tell you the talking heads were beating it to death. They were downgrading it. They were saying it was overpriced. Now it's trading at $300 a share. You just had to understand the thesis behind Costco. And you had to understand that thesis about a year and a half ago. And what is the thesis behind Costco? It is Amazon proof. Amazon will never be able to touch it, no matter what Amazon does. And Costco just keeps rolling out new layers of products. And so what has it done? It's gone from 150 when it was overpriced. Now it's approaching $300 a share. So to really understand better what the value of something is, you have to see what the drivers are behind it. And Costco and Google are two really great examples. And I'll just give you one third one really quickly. And that is back in, I think it was 2016 or 2017, Netflix rolled out their first price increase. And the prices of Netflix, which was trading about $150 a share then, dropped to $80 a share. It got crushed because all the weak hands dumped it under the assumption that a $2 or $3 increase in price in subscription per month would cause a ton of people to dump it. No one dumped it, and now it's trading at $300 a share. It was a tremendous buying opportunity that I missed. So it just shows you, as long as a thesis is intact and you believe in it and you understand it, like all the traders who came in and grabbed Netflix at 80 and drove it right back up, not back up to 150 where it was trading when it increased its subscription rate, but now up to 300, just understood better what was going on in the market than I did at the time about Netflix. So it's really about what the drivers are. And I've given you the best 5G network stocks. They're Skyworks, they're Ceragon, and they're Verizon. Now, this is the hottest tech sector for the next 3 years. It's going to outstrip 5G, I think, many-fold greater, and it's fintech. And it's what I alluded to in the invitation here. This sector, actually, I don't get actually too excited anymore about anything, but this sector really has me in a sort of, not in a fervor, but it has me worked up, because this is such an obvious monster that has gone unexploited. It's really pathetic. And the reason it's gone unexploited is it takes a little bit of work in order to ferret it out. And all those guys on the internet with their content writers don't have any idea what's going on in the sector. Now, I wanted to show you one of my favorite fintech stocks, and the reason I'm showing it to you is it's gone. And I love Shopify. And you see these red lines? I put these red lines in here when I got into Shopify. I didn't put them in. So help me God. Those lines have been on Shopify since September of 2019. And Shopify is your typical fintech stock. It integrates a payment solution via technology. And I believe that it's not going to be far off. And we're not even that far off now. But in the next 5 years to 10 years, we will not use money for anything. We will become a paperless society or a moneyless society. When I'm waiting in line to get a McDonald's hamburger and I see the 3 people in front of me, they all pay with a debit card. They don't even pay $5.75 for a Big Mac with cash. They do it electronically using fintech. And we're going to go to a 100% paperless society. Basically, you're just not going to carry around any money because you're not going to need it. You're going to use your debit card, and there are going to be ways of transferring money. Like my son, and these are 2 companies that have not gone public, but when they do go public, we're going in on the IPOs. And I'm giving these to you now. One is Venmo, and the other is Zelle. Venmo allows you to transfer money from a debit card into your bank account. But you can take someone else's debit card and so let's say the gardener comes to your door and he mowed your lawn and he wants $20. Well, you're going to have a device that will allow you to transfer that $20 into his bank account. You're not going to hand him a $20 bill. You're going to do it electronically, and the cost is going to be zero. You're not going to get charged a dime. And a lot of fintech is going to use blockchain technology. Because blockchain, this is a perfect way of leveraging blockchain technology by big corporations. So you're not going to use money for anything. I mean, maybe you'll carry around a couple of $5 bills for an emergency, but as long as you have that device, you can transfer money automatically anywhere in the world to anybody who has a bank account. And if they don't have a bank account, I mean, it's just not going to be possible for them to do business because it's the only way money is going to get transferred. I have loved Shopify since I started using it. And look where it is. It's gone from 160 and change. It's now approaching $400 a share. Now, this one, I think, is gone too far too fast. And this is not a stock I would chase up. I would wait, I would hope and pray it would come back. But I just want to give you an example of the power of fintech and what it is. Now, you never hear anybody talk about a moneyless society, but that's where we're headed. And I think everybody out there who's listening to me knows, just like I know. I hardly pay cash for anything anymore. I use my debit card for almost 100% of my purchases. And it's going to get to the point where carrying money in your wallet is going to be simply useless. And it's really good too, because if people steal your wallet, they're not going to be able to access any of your accounts. Now, just to talk a little bit about it, our credit cards and banks are connected to our smartphones, so we can check out easier. We use apps on our banks so we can pay our bills. Like, I never write a check to pay a bill. I go into my bank, I put in a dollar figure, press a button, and they pay the bill. It's going to get to the point where you won't even have to do that. You're simply going to go on your app, dial in the recipient, and you're going to transfer the money right into their account. It's going to get much more sophisticated than it is now. And two of those companies that are going to do it are Venmo and Zelle. And they're still private corps. And when they go public, we're going to get into those IPOs. As soon as they start trading options. So these companies are focused in developing innovative technology for online and mobile payments. And the 5G network is going to make fintech even more powerful, because it's going to allow these transactions to take place faster in mass, so that the whole world will have fintech connectivity. So if you want to send $25 to a friend of yours in France, all you're going to do is press 3 buttons, and that $25 will be automatically converted via the exchange rate into francs and be available in his account in a millisecond. No one is going to be using Western Union. They're not going to be wiring money. They're going to be using Zelle. They're going to be using Venmo, and they're going to be using other technology that hasn't even been developed yet. Now, the metric that really impressed me was that in 2018, 70% of senior banking executives said it was vital for them to focus on and collaborate with fintech companies. Now that number is, I put in $100, it's 100%. That was a typo that I missed. Every single bank executive for every bank now understands that if they don't have fintech capability, they're not going to get anyone deposit money in the bank. It's now become a standard. And this whole area is so much in its infancy because there's just nobody focusing in on a moneyless society. But I know that we're going moneyless, and I know that you know now that we are too. There's no way we're not. Now, London has really gone bonkers, and they're way ahead of us in fintech. They've deregulated it, and they've become a fintech hub in the United Kingdom. Mexico has 273 fintech ventures. Brazil has 380 fintech ventures. These are all companies that are privately owned, and they have not gone public. Japan SoftBank is pouring money into Clip. Clip, I read about every other freaking day. It's one of the best technologies and companies out there to wirelessly transfer money. It's still a private company. When Clip goes public, its initial IPO rollout, it's gonna go bonkers. I hope it stabilizes and achieves a reasonable valuation so that we can ultimately get into it. But this is my major 2020 where my eyeballs are focused on Clip, Zelle, and Venmo. And they're just pouring money into this area because they know it's the future. Now, I was going to go through a whole bunch of stats, but I don't want to bore you with them. We've been going about an hour, and I don't want to wear you out with them. But this is all the research I do to make sure that if I create a position, we're going to be creating a position that isn't going to burn out and isn't going to come back to bite us. We're going to get into the best fintech stocks possible, and we're not going to hold them for a day or a week. We're going to hold them for a year or more and let them appreciate in value, because all of them right now have just begun to bring in decent money from fintech. It's, again, even more in its infancy than 5G. And the reason I say that is because fewer people know about it. I still don't get any spam mails from people talking about fintech. And the reason it's a little complicated. 5G, everybody understands because they got 4G on their phone and 5G's faster. But most traders who are looking to make a quick buck and don't care about anything need an explanation of fintech. So they don't ever bother throwing around fintech companies. And as I said, physical cash is disappearing from the world. Credit and debit cards have made using physical cash to pay for most things obsolete, including a Big Mac. I mean, if you're going to pay for a Big Mac with a debit card, you're going to pay for everything with a debit card. And according to Gallup, only 14% of Americans use physical cash for most purposes. I would bet in 5 years, 0% of Americans use physical cash for anything except for emergencies. So physical cash is dying. And the Federal Reserve shows a 739% increase in the use of check and non-prepaid debit cards. That's between 2000 and 2017. That percentage is going to skyrocket as these fintech rollouts go public, become widely known, and become widely used. Millennials already know about Zelle and Venmo. But me as an old timer, the only reason I learned about it is every time I open my bank account, I see a Zelle transfer out of it by my son, who's a freshman in college, who wants to buy something, and he just Zells it out of my account. He Venmos it out. So that's how I learned about it. Now, I took the stock ticker out of this because this is my master fintech company. And to me, this is the blue chip of all blue chips of fintech. And I have to hold something back from you. We're going to get into this stock. At 294 bucks, if you think it's overvalued, forget about it. It is not overvalued because it's going to control an enormous piece of fintech, and it already does. And it's only going to be like an octopus and gobble up all of these fintech companies as they get rolled out. I mean, this is really a stellar investment. The other one, and I'm going to tell you what this is. I'll just hold one back from you. And I left it up there. It's PayPal. PayPal is a tremendous opportunity to make money. It had an earnings glitch. It went from 121 down to 107. None of these stocks are going to go straight up when you buy them over the long haul. But look where it started. It started at $72. And that's where it was basing for a long time. This is a 2-year chart. So even if you were holding at 121, you're still now already back to 107. This is going to eclipse 121 and it's going to go right through it. So my number one, I'll keep a little bit in the dark, but my number 2 fintech right now is PayPal. But the best fintech companies have not even come out yet. And these are the kind of sectors that we're going to invest in. And we're never going to take a position that expires in less than 12 months. That doesn't mean we're going to hold it for 12 months. If we're lucky enough to have the stock just skyrocket on us and we're up 200 or 300%, we'll take our profit. There's nothing wrong with that. And then if it continues to run, we've left money on the table. But if it hits a glitch, if it hits a slight earnings miss, if it takes a 5% pullback, we'll go back in again. So, and we may take positions that are even longer than 1 year. This is not the kind of investing service where you're going to get overnight returns, because it's about capital appreciation. And we're looking at 200 to 300 to even potentially 400%, and I'm not hyping that, with very little risk and very little money, without gimmicks and baloney, because we're going to be putting the small amount of money that we need to, if you want to only invest in one leap, in a company that has the potential for massive capital appreciation. And that's the only stocks that we're looking at. The ones I told you about in 5G, I'm going to look to get into. There's other stocks, and I'll just mention them really quickly that I'm already in. One is Albemarle. I still have 10 months left. They are the #1 lithium miner in the world. I have a $75 strike. Albemarle is right around 70. It's got to go up $5 to hit the strike in about a year. And you know what's happening with driverless cars and with electric cars. They all need lithium batteries. And this is the #1 lithium miner in the world. So I believe now the 75 strike has been eclipsed a few times. I mean, Albemarle was up to almost 80, and then it fell back because it's in Peru. Peru is giving it a hard time as far as regulatory concerns are concerned. But it is going to appreciate, and I think, and Albemarle used to trade at 140 before Peru stepped in and tried to kick out, what they were trying to do is put a cap on how much lithium they can mine per year or per month. I don't remember, but they were going to try to limit the amount of lithium they could actually mine. And there's been a lot of legislation in Peru to knock all that out. And it's going to get knocked out. And once it does, Albemarle is going to fly. And I'll tell you my other long-term position, and I think you're going to laugh when you hear it. It's the WWE. It's the Worldwide Wrestling Entertainment Company. It missed its earnings and it took a massive beating. And I bought a 1-year expiration on the WWE, because what is it rolling out? It's rolling out XFL football. And I keep reading. Now, the WWE is already at my strike price on my leap. It's still got to go a little bit farther, obviously, because it's got to cover the price of the leap. But the leap was not expensive. I just don't remember how much I paid for it. But there are rumors that Disney is going to buy the WWE. Now, I don't know if that's going to come to fruition. I watch Benzinga, I watch Options Monster, I watch all of the data feeds. I read a couple of stock posts. There've been a lot of really big insiders who believe that as a form of entertainment, Walt Disney will dumb it down a little bit and make it a little less violent. But right now, there are three major venues. There's like, SmackDown and this down and, beat yourself over the head with a chair down. All of those are carried on Disney networks. So they're in very close collaboration with Disney right now. And even without that, with the XFL coming up as a driver, I think that the WWE is going to skyrocket. It's now trading at 1/2 what it was trading at before it had its earnings miss. So those are the kind of things I look for. I don't believe there's any way the WWE can be a loser with the XFL coming up. And remember how you buy the rumor and sell the news? We're buying the rumor, and the rumor is the XFL. And Albemarle, I think, is a lock on its zinc production. So those are the kind of theses I'm looking for to get us in so we can have a great return with a very small amount of risk. There's really very little type of investment vehicle that mirrors this, except buying the stock, which costs a lot of money to hold. And you won't get the percentage return you will on a leap. I mean, if the stock doubles in price, the leap will go up 300 or 400%. So you get better capital appreciation with less risk, and you tie up less money. So to me, a leap beats owning the stock to hell. And remember just one other thing. If the stock gives out a dividend and you hold a bullish position, you get the dividend. It comes into you. So Verizon, I believe, is paying 6 to 7% dividend. As you hold that, you're going to gain that dividend. So that's a tremendous advantage also. I mean, right there, if you cut break even on the position at expiration, you've made 7.5% on whatever money you've tied up, which is far more money than you could ever make in a money market account. So let me just show you the service. This is another company. I don't want to tell you this, but I put the ticker up there. It's called WTER. It makes a really unique kind of bottled water. This one I'm a little wishy-washy on so far, but these are the kind of things I'm looking for. It's an alkaline water, and this alkaline water, they're the only company in the world that makes it, has a tremendous amount of medicinal properties. And it's gotten beaten up on earnings. And I don't want to go, because this is more of a minor play than a major play, but I'm always looking for niches in products that could catch fire and take this company from $1 to $20 with very little risk. That's what we're looking for. So here's the service. Now, I'm charging $999 for 1 year, and it comes to $83 a month. And one winner will, on one leap, will pay you double the cost of the service. It's very inexpensive for the amount of, honest to God, I do work every single night on this because I take every leap that I put out there, and I'm going to buy it at the price that I put out in the newsletter, and I'm going to update you every week as to where we are with the leap. You're not going to just sit and hold it for 3 months and not get any updates. And the first 5 orders are going to get a Year of My Options alert newsletter. And that's where I take my shorter term option spreads. Now, in 2017, I made 105%. In 2018, I made just over 100%. In 2019, I haven't figured it out yet. This was a much tougher year for me to trade options. So I can't give you a percentage, but I doubled my money in 17 and 18, and in 19, I just don't know exactly where I am. So the first 5 who come aboard get that. And all I can do is promise you the best sector, finding the best sectors and the best stocks in the best sectors to get in and ride those markets up. And some of them may have pricey valuations, like Google did at $150 a share. But we're buying a thesis. And if you believe we're going to become a paperless society, fintechs, and I'm using the word no-brainer, but the fact of the matter is it is a no-brainer. I mean, that's the way the world is turning, and those of us who get into that fintech revolution early are going to make the most money. That's the sector that's really hidden in plain sight that nobody looks at. But 5G is also another great sector, and there are other sectors too, and other great stocks. The WWE, I know, is going to be a big winner for me, and I know that Albemarle is too. So that's it. The turnout here was really great. I really appreciate it. I'm going to answer any questions that you have. Our number is 732-4656, and we're always around. When Rory leaves, he still takes a call, but it's only today and tomorrow. I mean, I figure if you want to come aboard, you're going to do it, and if you're not, you're not going to do it. And obviously, it's totally up to you as to whether or not you think I'm going to make you money. And I'm very confident I will, or I wouldn't offer it. But I don't think you need more than 2 days to make that decision. I'm not a high pressure guy, but I think that's going to be enough. Now let me answer any questions. Okay, hang on a sec. Hold on. Okay, hey, good afternoon. Hey, are you really that old? Thank you. Not that old. Hi, Reg. Hey, listen. Listen. What you're quoting me is the problem you have when you buy short-term positions, Reg. That's why I'm not doing that. I mean, we're looking at long-term positions, not short. And we're playing a thesis, which is why we're not buying a position that's going to expire in less than 1 year. I mean, if a stock has an earnings slip, we don't want to have to care about it. So believe me, you know how many services advertise for a weekly paycheck based on getting weekly options. Weekly options are brutally hard, and I see big money getting killed on them. Because I look at Benzinga and Options Monster, and they show you all the trades that are crossing every single day in the options market. Big money likes to move into weekly options, and I see them getting just crushed all the time. So these are the things I want to avoid. The stock before Verizon, I'm not sure there was one, but let me go back. Let me find it. Hold on. There was, okay. The 5G stocks were Ceragon, where Verizon was the first. Ceragon Networks was the second. And the third one was Skyworks Solutions, not Zayo, because of its potential for going private, but Skyworks right there, SWKS. And that's the one that's skyrocketing in price right now. I mean, it's on a parabolic move up. I would never chase a stock on a parabolic move. I mean, that will come back down. I don't know how far down it's going to fall, but that launch up eventually is going to end, and it will pull back some. I mean, there are too many short-term traders in here not to bring this back down some. Okay. Dermo. I don't know what that is, DD. Would you be buying long-term options on the ones? Listen, we're only buying long-term options, and the stocks Sam, may be over $100. Remember, though, we're buying out of the money positions, because our thesis is going to be that it's eventually going to eclipse that out of the money space, move through, and then continue to appreciate in value. When I buy a position that's going to expire in over a year, I am not going to buy an at the money or in the money position. It makes it too risky. If you buy an out of the money, not deeply out of the money, but if you buy a position, and from stock to stock, I would have to see where the best place to get in is. That's going to decrease the cost of the leap significantly by staying away from at the money and in the monies, DD. Number one is Verizon, is the best. Oh, I'm sorry, you left it. Okay, Robert, okay. Demo, okay. Well, I mean, some of these are tickers I'm just not familiar with. But listen, I appreciate your time. And at the very least, I hope you learned some good information here. And here's our number if you'd like to give us a call, 786-732-4656. And we're available all the time. So listen, everyone, have a really, really wonderful evening. And yeah, we'll be making a real recording of it. Yeah? Okay, Roy will put the link in if you're interested in purchasing. There will be a recording. Thank you for calling me young man. You made my whole day. I'll just tell you this. I have a 36-year-old daughter, and I have a 33-year-old son. I have an 18-year-old son. So I'm no kid. Do you ever sell against the leap? You can do that, Steve. And I didn't want to really get into that because that's a little more complex of an investing style. But there may come a time when we do that. So if I get into doing that, Steve, it would be another hour's worth of talk. But we can do that, and we may do that. So, and Steve is talking about selling against the leap, and there is a possibility that we could do that. Well, you could sell against the leap if you really believe that the stock is going to come up upon a temporary stumbling block. You could either sell the leap and close it, or you can hedge the leap. We're not going to do it very often, but it's a possibility. That's all. And it would be few and far between that we would ever do it for, because it's going to take an enormous amount of money to sell against the leap. So it's not going to be common practice. But some of the stocks we're going to get into are not going to be expensive. They may be $5 or $10 stocks. So it may be possible to do it if, for some reason, I read something that there's a glitch. Like if I had Zayo right now, I'd be concerned about them going private. And that would be a position I would probably close rather than sell against. So it's my pleasure. And listen, and again, I hope at the very least this is educational, because that's all that I'm not sure what you're writing. Take a look at that. SAO. I'm not sure what that means, Dee Dee. Just either, just send me. Oh, Zayo. If I had Zayo right now, it would be a position I'd be very concerned about. Because if they go private, you're going to get hammered on it. ZAO. I showed it. I mean, it's right here. Right here. ZAYO. And you can see why it's just moving sideways. It's being held by very strong hands because it's a great stock, but no one's buying it because of the concern that they're going to go private. And it's moving linearly, and that's why that's happening. So if I was holding that and I had any kind of money in it, since we don't want to lose any of our capital because we consider that to be precious, it would be a position that I would probably close. Yeah, that's why I recommended the alternative at Skyworks Networks, SWKS. All right, everyone, listen, have a really, really wonderful evening. Have a great holiday next week. I day trade every morning. The market's really rough. There's no volume and no volatility. This is a time to really back off and just relax and enjoy your family, your kids, or whoever you have around, and just take it easy. So everyone, have a great holiday, and oh, no problem. It's my pleasure. My pleasure. Hey, Al. Hey, thank you much. Hey, thank you, Long. Thank you. Happy holidays. God bless you too, Dee Dee. Thank you so much. So everyone have a really, really great evening. Take care. Bye-bye.